Hello everyone, welcome to this week's weekly market view for Monday the 13th of March to Friday the 17th of March 2023. My name is Vishal. Let's get started. Alright, let's start with the Nifty analysis and let's start with the monthly chart as we do always. So if you look at the monthly chart now, this is the current month. We are in the month of March and we are somewhere close to mid-month of March. We are now coming a little bit more deeper into this level. So we got to be a little cautious as the market is moving inside deeper. We are still holding on to this level. So there is a possibility that we might see a scenario something like this also, and a continuation moving to the upside. Just in that case, if that does not happen, then let's move on to the weekly chart. On the weekly chart, this is where we are right now, and we are, as I said, coming or reacting from this weekly level of demand. Now, what we have seen in the past few weeks, the market is holding on to this weekly level of supply. It held it once, twice, thrice. This is the third time it's bouncing. So it's a very, very clear range that is being defined on the market, which is this range, right? Now, usually when the markets tend to travel in this consolidated range, they don't tend to remain for a very, very long period into a range. So they are more likely to either break out to the upside or then they are more likely to break down. Now, the only concern here is that the range of the Nifty, that is to the upside, that is 17,809 to 18,286. This is a pretty big range. And similarly, 303 to 16,754 is another very, very big range. So the bigger moves are more likely to come out once the bigger consolidation of supply is taken out or the bigger consolidation of demand is taken out. And in case if that happens, then we are going to be seeing big moves coming into the market towards these areas. So watch out for this level of demand in case if there is something drastic or some kind of negative news that might come into the market. Let's move on to the daily chart. Let's remove this. And on the daily chart, we were seeing another very important level, which was the 17,800 level. And last week in the weekly video, we had plotted this level. Price came very, very close to this level, missed hitting this level by just a few points. I think the high that was made was 17,799, and our level was close to around 17,805. And that indicates that even before the price touches the level, price is reversing very, very strongly. Now, if you look, although the prices gapped down into this level, there was a little bit of a reaction from the lows. Okay, now whether this will consolidate into some kind of buying in the few weeks, we don't know about that. But looking at the SGX Nifty is indicating a very, very big negative opening on Monday as well. So we'll have to see how the Asian markets open in the morning and whether this move resonates into a very, very big gap down or whether it more or less opens and in the same point range, that is 90-95 points down. So now in case if the markets do gap down on Monday, what is going to be the plan of action? Because now we'll have to go to slightly smaller time frames and we'll have to gauge where the market can react. So I'm just going to load local data over here. And now you can see that I have more data on the chart, and some of the key levels to watch out for will be levels of demand below these lows, right? So in case if the market does breach the prior low, then we might see some reaction coming from lower levels of demand. So one level of demand which is already in play or which has already been tested is this area over here. So we might see this level in play, 17,250 to 17,155. And if this level breaks or this level breaches at any given point in time and market trades to starts to trade below this low, then we are more likely to see this gap level. Now this gap level that you see over here is going to be a crucial level because this is where the highest put open interest on the Nifty is, which is 17,000. So as the markets are coming down, more calls are being written. There is more option selling that is happening to the upper side. Initially, last week, it all began with 17,800 being the highest resistance point. Then the interest levels shifted more towards 17,800. And now 17,000 looks to be a very, very prominent mark where markets might likely take a support in the coming week. If we go on to the 15-minute chart, there are some interesting levels to watch out for on the 15 minutes. So let's quickly mark these levels on the 15-minute chart. So on the 15-minute chart, we have one level of supply after the gap down, which is this level. And this will be a very, very key level, which is 17,650 to 17,684. This is also coinciding with the highest call open interest level. So 17,650 to 17,684 will be a level. Any kind of a market gapping up, we would be seeing some shorts getting triggered, and then the market might again consolidate or move even further lower. So this is one area to watch out for. And then definitely the bigger level is the 17,800 level, which is pretty much intact as of now. And that's this level over here, 17,805 to 17,900. Okay, so this is a level to watch out for. This is definitely a slightly better level, but this could be a level that could play out intraday. Okay, so these are the key levels of demand and key levels of supply for the coming week on the Nifty. Let's now move on to the Bank Nifty. And let us look at what's happening on the Bank Nifty. Let's start with the monthly chart on the Bank Nifty. Okay, finally we have the charts that we want. Let's remove all the tools. Okay, so the monthly candle is not looking that great yet, but since we are closer to the mid-month, this candle can turn to be a red candle or can even turn out to be a very, very strong green candle. So it's a little inconclusive as of now. But if you look at the demand zone is still sitting intact. This is the area where every time the prices have come, the prices have given a bounce once, twice. So you can see that the 39,500 level is going to be a very, very crucial level for the coming week or the coming months on the Bank Nifty. Any close below that level on a closing basis will indicate that the markets want to go a little further lower. But I don't see that happening right away. I could be wrong, but there are some key levels over here to watch out for. So let's quickly have a look at the weekly chart now. Just going to load Nifty Bank here. And if you look at Nifty Bank on the weekly chart, very, very similar pattern to that of the Nifty. This level is holding. And as I said that markets are trading in a very, very tight range right now. Although the range is, the range looks small, but the range in terms of points is a very, very big range. So just as long as the prices are trading over here, this will be a good area for non-directional traders to plan trade setups, right, in terms of options. But the bigger move are likely to come when the supply zone is taken out or when the demand zone is taken out. Now, obviously, if the supply zone is taken out, we will probably try to break the all-time highs if that happens. But in case if the demand zone is taken out, then we are more likely to see this demand zone come into play, just like the Nifty, 34,163 to 32,362. But of course, that level is a little far away from current market price. So the most likely move for the coming weeks will be inside this range. So we might again expect the markets to range between 41,800 to, let's say, 39,500 odd levels. Let's move on to the daily chart now. So here is the chart of the Bank Nifty. On the Bank Nifty, we had a reaction from this area over here. So this area is acting as a pretty decent supply zone now. We saw prices coming into this area, pausing for a bit and then gapping down. Now we do have these interim demand zones that are in play, and one level that I have been continuously watching is this area, which is actually tested on the spot, which is 39,500 to 39,165, and there is one level of demand over here, but this is going to be a level to watch out for on the daily chart. So any breach below, let's say 40,100 or 40,096 will trigger heavy duty selling towards this 39,500 level. Okay, so this level is going to be a very, very crucial level to watch out for. Any break below 39,500 on a closing basis will trigger bigger moves to the downside. So as much as I want to be positive, if this happens, then markets are going to turn more bearish. But in case if the 39,500 level holds for this week, then we might expect the market to move in this kind of a range. So first we will have to watch out for this level, and markets could gap down and then move up. Or in case if this 40,000 level is breached to the downside, then we might come towards 39,500 and move to the upside. Now, like I said last week also, I generally look at the spot charts to gauge the levels. But in the case of Bank Nifty, I'm going to make a little bit of an exception because I want to show you something which is important. So let's go to the futures chart of Bank Nifty. We'll go to the March series, and let's go to the daily chart. So you can see I have already marked the level, and if you comparatively look at the difference between the two, the futures level, which is the March level, is still intact, 39,498. So there is a likelihood that in the coming days or in the coming weeks, the markets will try to come towards this level. Maybe try to trap all the short sellers below this level, since these are the prior lows. And generally, whenever the market tends to do that, all the stop losses below these support levels are likely to get triggered, and more likely market is going to come into this area and most likely reverse to the upside. So as an exception this time, I'm going to be looking at the futures chart, and as I said, if 39,200 level is breached on the futures, then on a closing basis, then we might see a further fall. Unless and until this level is intact, the view will be that every time the prices come into this, the prices are likely to move to the upside. So this is potentially the view on the Nifty and the Bank Nifty. These are the key levels to watch out for in the coming week. Let's move on to the USDINR. Now, just in case if there are people in the room who are attending this session for the very, very first time, these are the key levels to watch out for on USDINR. And here we can clearly see the monthly zone is still intact. So the monthly zone is not removed yet. Prices are now continuously consolidating in this weekly supply zone. This is that weekly supply zone where prices are just going back and forth. And any reason why the prices are going back and forth? Because Nifty and Bank Nifty are also moving back and forth between the low range and the high range. So again, for the USD INR, this range breaking is also going to be important. So in case for some reason, if this range breaks to the upside, right, then Nifty Bank Nifty will also break the range to the downside. So as long as USD INR is holding on to this range, it's going to be good for the indices to remain sideways and to maintain a slightly bullish view. But in case if the the USD INR currency breaks to the upside, then we are more likely to see a downside in the market than any kind of upside. So this is the area to watch out for, that is 80.10 and 82.30 to 83.31 in the coming days on the, and any breach of this level will probably trigger longs and shorts on the indices as well. This is slightly a bigger view. Let's go to an intraday, and on the intraday we had actually plotted a supply zone on and you can see over here very closely. I had also mentioned that in case if the price does come into this area, there will be some kind of a selling, and that is exactly that has happened here. Now markets are consolidating. We did have a slight breach, but as I said that when you have these two levels more or less very close to each other, it is always safer to put your stop loss above the pivot level. Okay, so anyways, this level slightly breached. We got a reaction from the above level and the markets did come down. There is no clear level of demand on the USD INR, although we do have these gap levels of demand where prices have reacted. So let's go to the 60-minute chart, or let's go to the 75-minute chart. And on the 75-minute chart, we do see this one level of demand which has been tested several times. Now there could be another reaction from this level. So 81.45 to 81.36 is one level to watch out for. Maybe I'll just fine tune this level over here. And 81.26 to 81.21, right? To the upside, we do have this supply zone here, which is sitting at 82.66 to 82.75. Keep in mind that this supply zone is within the higher time frame area. Okay, so it's not going to be very easy for the market to just breach these areas and move to the upside. Even if the market breaks, let's say this area of supply, eventually this is what we are more likely to see than this happening. Okay, so just keep a close watch on the USD INR to get some cues on what is going to happen on the Nifty and the Bank Nifty. All right, now let's move on to some important stocks. Last time in the comments, some of the students, put in the chat box that, why don't we look for some key levels on some highly liquid stocks, right? So I'm going to look at 3 stocks for this week. The first one being Reliance. So let's look at Reliance and let's see what Reliance is doing on the higher time frames. So let's quickly start with the analysis on Reliance, and let's start off with the monthly chart. Always gives us a good gauge of what's the top-down approach happening. So let's look at Reliance on the monthly chart. On the monthly chart, we are seeing some kind of a consolidation happening. Some of you might call this like a double top pattern, and double top pattern is considered to be a more bearish pattern than anything else. But what we need to keep in mind is that we are at the slightly lower, lower range of price, right? So generally, whenever the prices come at lower levels, we might see a bounce coming in. Now we don't get that clear picture on the monthly chart, although we can also see that there has been a strong reaction from this 2161 odd level. So in case if let's say these support levels break on a closing basis, that is 2305 odd level, we might tend to see a little bit of a downward pressure on Reliance. And if that happens, then there is very likely the mood of the markets is going to be more bearish than bullish, because taking into consideration Reliance is the highest weighted stock on the Nifty. In case if that doesn't happen, as I said, and if markets do take support at this level, then Reliance will also start moving up, which means that Nifty will also start moving up and probably move again into that consolidated range. So for this week, 2300, 2305 is going to be a very crucial level on Reliance to watch out for. Any breach below that level will probably trigger a little bit of heavy duty selling on Reliance. Now, what are some of the key levels, let's say on the charts of Reliance to watch out for in case if the market does start moving up or does start moving down? Let's keep a close watch on them. Okay, so here is the 60-minute chart of Reliance, and the key levels to watch out for on Reliance, in case if we do have a breach below those significant levels. We are already taking a big chunk of support at this level. So tomorrow, everybody is going to be looking at the break of this level over here. Okay, so a break and a close below this level. So this is where markets have been taking a lot of support, and every time the market has been coming over here, it has been giving a significant bounce. So the level to watch out for in case if this level breaches, that is the 2300 level, which will be a level on the 60 minutes, and that will be more or less sitting inside this area. So let me just zoom into the chart here. So I'm going to go ahead and take the liberty of marking both the levels, because this is like a level on top of level scenario. So 2326 to 2204 will be a level to watch out for a potential turn in Reliance. I would not be extremely bearish in this area, right? Because this is an area where the prices have given a nice move to the upside. So there will be some level of interest coming closer to this 22, 23, 22, 20, 36 level, and the 2214 odd level. Okay. Let's see whether we do get a bounce or prices do come towards these levels in the coming week. On the supply front, we do have this gap level of supply. Not a very high probability one, but it is a gap which was created on the day of the gap down. So we have this supply zone. We want this supply zone to break for any move to the upside, but this can still act as an interim obstruction for Reliance to move to the upside. So in case if the markets do move down, then I do believe that from here, that is 2236 to around 2355 will be a good profit range in case if the longs are triggered and prices gives a nice bounce from this level. Okay, so keep a close watch on Reliance. The next highly liquid stock is definitely HDFC Bank. So let's go to HDFC Bank now and let's gauge the levels on HDFC Bank. So let's start with the monthly chart on HDFC Bank. And we look at the monthly chart on HDFC Bank. We are pretty much high on this range. And here you can see that closer to the all-time highs, we are getting some kind of a rejection on the monthly chart. Price action is suggesting that demand is still way lower. This is the weekly chart. Here also we are potentially seeing some kind of a bearish formation. Now this could possibly translate into a big move to the downside because we are closer to the support area. So who knows, in the coming weeks we might get a new supply zone or a big leg out created on HDFC Bank, but that has not yet happened. So taking this into consideration, we might have to wait for another week for a pattern to get created, but we can definitely anticipate that. On the lower end, again, we are very close to these levels. So again, whenever the market does come closer to this support area, we are more or less likely to see a bounce. This is a crucial area for HDFC Bank, from where we have seen a reaction which is coinciding with the bank Nifty level. And if we just go a little bit more further onto the charts here, so we have this entire consolidation, and just below this consolidation we might see some kind of a level of interest here. So if you can see very closely, just look at where I'm going ahead and marking the level. This is that rally base rally, and this rally base rally is sitting right below this consolidation, this big consolidation, right? So now on Monday, if the market does open gap down, everybody is going to be looking at these lows, right? and the moment 1559 breaks to the low, everybody will start pulling trigger for shorts, right? So this is going to be your area of demand from where most likely prices are like to trap all the short sellers, and then markets will try and move up. And this is also an area to watch out for, that the moment this level is hit, start looking at your bank nifty and your nifty index to see a potential bounce coming in. So sometimes you can take reference of stocks also to anticipate bigger moves, taking into consideration the overall weightage of HDFC Bank is the highest weightage in the bank nifty index as well. So HDFC Bank and Reliance will give you some kind of a clue in terms of where the direction of the market is. All right, so this is just a clue, and you can start observing these charts as you go along. The last stock of the day is ICICI Bank. So let's quickly have a look at ICICI Bank, because this is also a pretty heavy duty stock on the index. So let's quickly go through ICICI Bank. So let's start with the highest time frame of the chart here, which is the monthly chart here, to gauge the short-term levels. Again, very similar picture on the monthly chart, which can translate into another new level of supply, but it's too early to say that because there's a monthly chart and the monthly candle hasn't closed yet. Let's move on to the weekly chart. On the weekly chart also, we are seeing a more or less very similar pattern, but as you can see, prices have created this weekly level of supply, reacting nicely, bouncing from this level of demand, and we are in a very tight area of consolidation here on the weekly charts. There is definitely more bearish pressure than bullish pressure, but as I said, when the market is extremely bearish, market has already sold off significantly, right? So what are some of the areas to watch out for ICICI Bank? So you see this drop supply zone 893 to 909, right? So this is a key area of supply, and we might expect to see another round of selling pressure coming in if the price moves towards this area and then turns down. Of course, the market is very far away from current market price. Right now we are at 842 levels. So what we need to focus now is, in case if you are looking at demand zones, the bigger demand zones or the better demand zones are definitely located below this low here. Okay, so we'll have to try and gauge where are those key levels. The one key level that I'm seeing based on the daily chart is this level over here. Okay, so this is going to be a key level to watch out for, 790 to 777. Also 790 is more or less coinciding with the 800 round number, and we all know institutions love round numbers. So this is an area to watch out for. If somebody wants to probably plan a little bit of an aggressive trade, expecting to see a bounce coming in on the market, then we do have another level on the 60-minute chart. Not a very high probability level, but this level is still there. This one is one level, or even this one. I think this is slightly better. The only problem with this level is the formations are not that great, and the risk on the trade will be a little bit more larger than usual. Okay, but it's there. Okay, so keep a close watch on ICICI Bank. In case if the 796 level breaks to the downside, then definitely you have your 790 odd levels to play about. Okay, so a few levels for intraday, a few levels for swing and positional trading. All right, so it's pretty much the wrap up for this week. I hope you enjoyed this analysis. Looking forward for some more analysis next week. As we always say, if you do like this analysis, do hit the subscription button and become a part of Sharekhan Education channel to receive more videos like these and a few others as well. Take care everyone. Have a great trading week. See you all next week. Bye-bye.
This should not be treated as a recommendation. Please conduct your own analysis or consult a financial advisor before investing.